What if I told you the most positive news for Bitcoin isn't new all-time highs? It's actually the crickets.
But now that deleveraging is done, I think that Bitcoin is going to catch up to gold. And, Bitcoin's old high was over 110,000. So I think there is a lot of room to catch up as a sort of non-dollar asset.
Compare now to March 2024 when Bitcoin broke past the 2021 all-time high, and then in November 2024 when Bitcoin started its move up to 100K. It's a ghost town here, and this is confirmed by Google Trends. There just isn't the excitement in the markets we'd expect to see. So why is this lack of enthusiasm actually a good thing? I can think of two reasons, one very obvious one and one not so obvious. Hi, I'm Raj. On this channel, we talk about money, and the obvious reason is because most people aren't here yet. What really draws a crowd to the markets is a feeling of risk-free investment performance where we're all gonna make it. A time where it's ridiculous to not be invested because every dip gets bought up and the price just keeps going higher. If you're not in the boat and changing your profile picture to laser eyes, you're getting left behind. And as cool as it is to be part of the group and make a bunch of money together, this is usually the end of a parabolic move up in price, which means it's still possible from a market sentiment perspective that there's more room to run. But there's also a belief that interest rates will go down eventually, which means that logically, the trillions of dollars in money markets, at least some of it, will move to more risk on assets because the incentive to keep money parked will actually decrease in that event. And I'm guessing that's when a lot of people are going to feel safe investing in crypto again. Save us, Jerome Powell. You're our only hope.
It says buffering. What is that?
And number two, the not so obvious reason for why this lack of excitement is bullish is because traditional financial markets, big money, has embraced Bitcoin as a viable investment. But they operate very differently than the average crypto investor. They buy in bulk, millions at a time, can hold on to investments for decades if they wanted to, and are generally not flashy or emotional about the markets. Everything about them is measured and calculated. Recently, BlackRock disclosed quantum computing as a risk to the Bitcoin network. This was a great headline, but remember, big money operates differently. Even with that risk on the table, BlackRock has purchased billions of dollars worth of Bitcoin to date. And I think one key reason why this large-scale buying is happening is because of something that most people have already swept under the rug. Last year, Japan's central bank suddenly raised their interest rates. The Japan carry trade unwound and markets tanked out of nowhere. More recently, Japan's prime minister said that the country's fiscal state is worse than Greece's, which has had a pretty rough last couple of decades, so that's a very bold claim. There's so much more to this, but bottom line, this is another example of how a government, even a country as small as Japan, can pull financial levers, which affects everybody across the world. And to be fair, Japan isn't the only actor in this. We all know the Fed, which has been on a mission to lower inflation by keeping rates high, is in direct control of another financial lever themselves, US interest rates. So something like Bitcoin, that is seen as an alternative to the system, is gaining momentum at all levels. Individuals, companies, investment groups, and even countries, despite volatility and despite the risks. So with all these financial current events, it's easy to end up like most people. Either you never start investing or get caught up in the chaos and lose money. You and I are probably very similar. We're generally interested in the economy, finance, and consume content around those topics, but we all know that our behavior, or in this case, our investing habits, are the only thing we can control and determine how our portfolio performs. So how do we maximize our chances of success with all these variables? My take for Bitcoin specifically is to use a proven strategy, dollar cost averaging. Buying a little bit every day, and the tips to success here are put in what we can afford to lose, so we're not tempted to sell if the market falls and stays down for a while. Next, of course, buying the right assets, something with a very good chance of being around and worth more in the future. And of course, consistency, staying invested and continuing to invest for a really long time. On occasion, I do buy a little more when the market dips with some spare cash, but generally this is a very hands-off strategy. On November 16th, 2023, I started a recurring purchase on Robinhood of $1 a day into Bitcoin, and the thing that I did initially was make sure that at least $365 was in the account. This let me set up a recurring investment for a year and not even have to think about it because the money was already there, and I just had to tap the buttons to get the buy orders to happen automatically. So once that was done, this took all the friction out for the investment strategy, and most days I forget it's even happening. Bitcoin was around $36,000 at the time when this started, and even though I didn't catch the 2022 low, I did buy early enough to catch the move up to 100K and beyond. This increase in price increased my average purchase cost, which is around $70,000 today, but even so, I'm up 49% overall. For context, if one of our investments got a 10% return every year, it would take us 7.2 years to double our money. I'm already halfway to doubling my money in just a year and a half. Now, I know it's not a life-changing amount of money, it's just $1 a day, but this investment is proof of concept with the least amount of financial commitment. And as things develop for me financially, at least in the way that I'd hope they would, I'll probably add to how much money I'm buying every day. But I do recognize Bitcoin doesn't go up forever. There are long periods of history where the price action is pretty boring and sometimes depressing. If those times come around again, the performance of this strategy will reflect that. The truth is, I don't know what's going to happen in the future, but if Bitcoin continues to prove to be a viable option as part of an overall investment portfolio, I'll continue to buy. And I'd love to know your thoughts and your plans for Bitcoin, so be sure to leave a comment. If you're interested in knowing exactly when to buy and sell crypto based on the data, check out the linked video on your screen or in the description below. I'll see you in the next video. Thanks for watching and have a good one.